Welcome one, welcome all to this week's webinar. We're excited to dedicate our time to explaining exactly what it is that we offer you. We've added quite a number of new instruments over the past year or so, and I'm sure some of you have a questioning eyebrow raised about what they are, as well as how do you trade them.
Before we get into that, we have an important message for all of our valued viewers. Knock knock.
Who's there?
This is not another lame knock knock joke. The UFG course is finally here. We are super excited about it because even though we were all expecting it, it still blew our minds.
Well, I haven't seen anything like it, Hannah.
I know. I mean, it has the theory videos that make learning theory so interesting. It is audiovisual, so staying engaged and interested will not be a task.
Do you know what I like, Hannah?
What do you like, Tony?
That thereafter you get a little practical on the theory you have just learned. Just a few questions, like a pop quiz or something, just to test how much you have retained.
Wicked!
In addition, there are platform videos that teach you what you need to know on a platform you're familiar with, which is your MetaTrader 4. And those videos have practicals too. So you can actually interact with recorded price movement that was actually live at the time of the course being produced, and you can participate in the analysis of it. All of this in a classy USB drive delivered to you face to face or by courier in a beautiful package. What I think is brilliant is that you get to move at your own pace, no pressure and no falling back.
I know what you're thinking. If only there was a way for me to test it. You know, to sample this never before seen software. Well, you can. Just let us know and we'll send you a disk version free of charge. A number of the modules are unlocked for you to get the feel of the product, and once you're sold, you can buy the full version and open up a whole new world of Forex trading success. Visit www.ufgscholar.com and sign up. It's that easy. If you go ahead and do this now, you can get the launching discount. Contact the University of Forex and Gold, the key to Forex trading.
So, what has the Market Watch got for you?
First of all, let us summon our Market Watch onto our screen by using the Ctrl-M shortcut. Sidebar. You will also be able to do the like by clicking the icon that is a chart with an upward arrow and a downward arrow in the standard toolbar. Just in case your Market Watch is not showing all of the instruments on offer, right-click and opt for Show All, and all available instruments will appear in the list. Now, this list is long and this list is full of abbreviations. For you to find symbols easily, use the new chart drop-down menu that shows you categorized instruments so you can find what you're looking for in a jiffy.
With Forex, the contract sizes are exact and are as follows. One standard lot equals 100,000 units. This means, depending on which instrument you are trading, you will be buying or selling 100,000 pounds, yen, euros, USD dollars, etc. The volume is 1.00, and volume is MetaQuote's language 5, and it's just how the system understands the amount you want to purchase or sell. This means that each pip will be worth $10. You can figure this out by multiplying 100,000 by 0.0001, which is a pip, and your answer will be 10. The mini lot is equal to 10,000 units with a volume of 0.1 and a pip worth of $1. The micro lot is equal to 1,000 units and is a volume of 0.01, and a pip will be worth 0.10 or 10 cents. This is standard. However, metals, indices, energy, commodities and world shares will not be measured under the same ruler, albeit spot futures, because they are also currencies.
Great! Now that we see every instrument we have, here are a few things you should know. Metals are measured in ounces. One standard lot of gold is 100 ounces. This means 1 mini lot of gold is 10 ounces and 1 micro lot of gold is 1 ounce. As for silver, one standard lot is 5,000 ounces. That means 1 mini lot is 500 ounces and 1 micro lot is 50 ounces. Light sweet crude oil. One standard lot is 1,000 barrels. 1 mini lot is 100 barrels and 1 micro lot is 10 barrels. With indices, you can look at them as being in two groups. The group with one standard lot being 10 and the group with one standard lot being 100. Commodities. Now this is the most diverse category. It'll be best for you to take a look at any specific commodity you want to trade and find out what the contract size is, because going through all of them will take quite a little bit of time. Spot futures, as previously mentioned, work like the forex categories on the same contract sizes. World shares are all on one standard lot equals 100.
Psst. In case you haven't seen, we have a whole lot added to the list of instruments we offer. The JSE top 40 companies and the Kruger Rand are now tradable on our platform. You can now trade APSO, Discovery, Mediclinic, Investec, Imperial Holdings, First Rand Limited, Sunlum and plenty more. And they are all on a fixed contract size of 100 like the world shares. Have a look. You can check the specifications by right-clicking in your market watch, opting for symbols, picking the relevant symbol and checking out its properties. Here you will see the following: the spread, which is 0 because it is variable, the number of digits after the decimal comma being 5, with the exception of course of yen pairs, which has 3 decimal places, the contract size, the profit calculation mode, forex for forex and CFD for everything else, the swap on buy trades left overnight, the swap on sell trades left overnight, as well as the margin calculation mode, forex for forex and CFD for everything else.
So what are CFDs? In finance, a contract for difference, or CFD, is a contract between two parties, typically described as buyer and seller, stipulating that the seller will pay to the buyer the difference between the current value of an asset and its value at contract time. And if the difference is negative, then the buyer instead pays the seller.
All instruments, save forex pairs, fall under CFDs. So let's get you placing some trade, shall we? We will first look at the difference in the movement different instruments see in a day.
The GBP USD pair to represent the forex category, we're looking at 150.6 pips on that day. The JSE moved 74,748 pips that day. Copper moved 1,226 pips that day. Gold moved 3,899 pips that day. Light sweet crude oil moved 182 pips that day. Google moved 3,020 pips that day. The Canadian future moved 74.3 pips that day. Okay, so let's do some trading. We will sell 100,000 British pounds at 1.67870. The margin will be $335.74. This means that if we have less than $335.74 in our account, we will not be able to place this trade. Now for the JSE. Oh boy! We couldn't place the trade because in order for us to be able to place this trade, we need to have at least $35,344 in our account. We only have $15,147.93 in our account. So we'll place a mini lot trade. we need to have at least $3,533.12 in our account in order to place this one. Consider the commission of $3 for every mini lot. We will sell 100 ounces of gold at 1284.48. Our margin is $256.90. Let's sell 100 units of Google at 532.15. Our margin will be $5,321.50 and the commission will be $15. If we sell one standard lot of the Canadian future at 0.90370, our margin will be $605 and there will be a commission. Our margin will be $605 and there will be a commission of $30. With light sweet crude oil, if we sell 5,000 barrels at 101.88, we will need at least $815.04 in our account in order to place this trade. Have a wonderful trading experience.